Welcome to the Best Business Podcast, the podcast for established marketers, entrepreneurs, and CEOs, the ones who want to join me in my mission to create 200 new multi-millionaires who solve world problems with entrepreneurship. If that's you, then this podcast was created to give you access to the tools, training, strategies, and tactics you need to achieve multiple seven-figure profits as soon as possible. This world needs the best business you can build, so please get ready, open your mind, believe you can do this, and let's build a better world together for future generations. Hello, everyone. Thank you for joining us. My name is Daryl Urbanski, your host as always, and today we are joined with Anmol Singh, a trader, entrepreneur, and explorer. Anmol started trading during his early college years without much luck. After a year or so, he discovered a pattern which allowed him to go from zero to making a positive income as a trader. Today, Anmol has generated over 7 figures for him and his investors in trading wins and continues to remain a stock and forex trader. He is also an avid real estate investor with a large portfolio and has funded 2 other tech-based companies. Today, Anmol spends most of his day managing funds and working with students of LiveTraders.com, which he co-founded in 2014. I've asked him to join us here today to help those of us curious about trading in forex as a form of investment get started and avoid the common pitfalls. So Anmol, thank you for joining us today. I appreciate your time and you being here. How are you doing, my friend?
Thanks for having me. Good to be here.
Thank you. And I kind of covered a bit of your background there, but I know it's kind of like a black box. There's people that love trading. There's people that don't love trading. There's people like say, there's movies and stuff that make it seem like the only people that make money are the brokers. And there's a lot of like misinformation out there. And I think that obviously that there's a lot of power in being a trader if you know what you're doing, and it can be a valuable income stream. I know myself, I've stayed away from it simply because I haven't understood it. And I just try to stay the things that I know I'm good at. But I know there's a lot of other people that they do it and they go through trials and tribulations. I've got relatives that I know that I don't know whether they know what they're doing or they're just pulling the slot machine arm because you hear yay and then you hear them crying and then you're not sure what's happening. So again, I appreciate you being here to kind of hopefully shed some light on this, but can we kind of get back into how you even got started? Like, why did you even trade? Out of all the options of things you could have done, what even got you interested in trading in the first place?
Right. I mean, the answer is actually one word, which is money. But I was in college, in my university, and we had these meetings where people were discussing about the markets, the FTSE, the Nasdaq, and I had no idea what a Nasdaq was. I didn't even know what that meant. So that got me really curious, and I started off by just reading online, the blogs, websites, Wall Street Journal, watching Jim Cramer on TV, and then starting off there, slowly reading books. And as I read those books, my curiosity got better and better, just got more and more that I wanted to learn more. And then what ended up happening was I started a blog, which was an old blog called LiveTraders.org at that time because I couldn't afford the .com. So, what happened was I used to just publish my thoughts on there, just, what I'm doing, what I'm thinking, a little research about a particular stock. And, that eventually caught the attention of websites like Yahoo Finance, who basically hired me as like on a freelance basis as a writer for them, where they used to pay, $150 an article. But that was really good for me because at that time I was in university. I was still in college,
Right.
studying, and $150 an article, heck, I could write 5 in a week. And that's what I really do. I just banged out article after article, just, kept getting that 150. But what ended up happening was those articles spread across social media and people started talking about how good the research was or, how much they liked that research. And that's eventually, that's how I got my start initially. But then what I realized was that, with investing, a good return people hope to make is 8%, 10%. And with the little amount of cash that I had in college, okay, let's assume I made 10%, which is amazing, on a $10,000 account. Right. I basically just made $1,000. That's not enough for to live on.
Yeah, you can't live off. Yeah.
Yeah, exactly. So I realized that investing is not really for me because you're gonna need a lot of money, like billions of dollars, to live off investing.
Right.
So that's where I got into shorter term trading, and shorter term trading. The journey really started off with my partner, actually now Jared Wesley, who's a partner with me at LiveTraders. He used to work for another education firm, and that was a really popular education firm. So I took a program from him. It cost me $6,000-7,000 at the time, where I took one of his courses, a little mentorship program, and that's how I really learned and got my start. And then the same company that whose course I took hired me on as like a consultant to manage their trading room,
Because you're doing
trade
so
with
well.
them.
Yep.
Exactly, because they gave me a certain amount of capital to trade. So they started me off with $50,000 to trade, and they had levels. Okay, if you make $100 a week, you go up to level 2, you're gonna get more money, and they had all the way to level 10. And level 10, you're gonna get $10 million to trade. So I spoke to the owner of the company, and he basically had, out of 5,000 students, only 7 or 8 of them who ever made it past level 5,
Hmm.
and I was able to get to level 7 in about 6 months,
Right.
which was pretty quick. So
Right.
that's when he hired me on as a consultant to train the other guys on how to do the same. That's how it eventually got started.
Got it, got it, got it. And what you said there is part of why I've stayed away from it because, for example, right now I've got one client where we built a funnel, we have a marketing promotion we're doing paid ads, we're spending about $60 a sale, and in 45 days as a customer, the average customer spends $240, and so for the ROI on that is phenomenal compared to 8 or 10%. But I also know that that trading there's, I mean, you said short term, and then of course there's long term. Like it's just a whole world I don't even know about. But then at the same time, when you make money, unless you're going into real estate, or even if you're going into real estate, because that's kind of my thing, marketing campaigns and real estate. I'm speaking personally here, but real estate, you've got to like let cash sit for a long period of time to build up, because I don't like having, because if you don't spend enough, you pay insurance, yada yada yada. So it just kind of sits there, and it'd be great if you could do something with it. So,
Right.
um,
I mean, people need to, determine whether do they want to be an investor, right? As an investor, we basically call this a wealth building account. So
mm,
wealth building account is where you're not touching it, you're not taking money out, you're just looking to grow that account into a bigger piece. So that's wealth building, which is more long term. And
mm,
then one we call income producing, which is more shorter term, where you're getting in and out. And that could be equivalent to wholesaling or flipping, in real
right,
estate.
right, right.
So
Now,
that's income producing.
when short-term sale, is that more forex stuff, like currency exchange and everything? Is that more the short-term game?
No, actually, stocks is what I'm talking about in terms of short-term trading, which is day trading, where you're getting
Got
in
it.
a stock and getting out the same day. So for me, a day trade might last 15 minutes. You're using bigger size positions, and you're looking to, let's say, a stock goes from $10 to $11, right? It
Hmm.
moves up a dollar, but if you have 1,000 shares of that stock, you just made $1,000.
Right, right, right. If you can sell them.
Exactly. Yeah.
Got it. Got it. Got it. Got it. Okay. So, what were some of the biggest challenges for you in the early days when you were kind of getting up and running, when you were first learning and going through? And obviously, like now that you've done it so much, you kind of, like the market's predictable. You know how to handle a lot of situations. There's no emotion in it. It's very predictable, I guess is the best way to call it. But when you were first getting started, I mean, there's a lot of pieces you have to wrap your head around, a lot of background info and research and stuff. What were some of the biggest challenges you felt that you faced or that you see others facing?
Right. I think the biggest challenge in trading or anything else in general is your own mindset. You have to have, because trading, those days are gone where they have traders sitting in front of computers all day pushing buttons. Now it's about statistics. Now it's about probabilities. It's about numbers. So if a number says, all right, you take 10 trades, you're going to win 4 of them, right? You're going to lose 6 of them, but on the ones that you win, you're going to make 2,000. The ones that you're going to lose 1,000. So even by losing 60% of my trades, that can still be profitable. And it's a numbers game. What people don't get is that concept where they are constantly changing their trading every single day. Maybe they lose money one day. Next day they're like, oh, I gotta try a new approach. I gotta find some new strategy. Then they go try that one, and now maybe that strategy has a losing day. Then they're like, damn it, this doesn't work. I gotta go on find another strategy, and then they just keep jumping from one strategy, one course to another, or one trading firm to another, and never really getting anywhere. What they have to
Hmm.
do is they have to stick through that and let the statistics play out, right? Because if we're taking 10 trades, 4 of them are going to win, but 5 of them are going to win, 5 of them are going to lose. You have to let that odds play out.
Mm. Got it. So it's a numbers game, and day trading is that sounds kind of high stress. I mean, well, it's day trading. How do you pick the stocks? Because wait, that's a really that's a loaded question. But I always felt my opinion, my what I thought stock is investing in stocks. You like do background on the history and the industry, and you know where things are going, and you know like when you invest in stock in a company, it's because you know that they're working on this or this is happening, and you kind of just have awareness. But it sounds like to you, you're just kind of watching trends and like you don't really even know about the company. You just are looking at their I don't even know what to call it, but just like the last 30-day trend, 60, 90-day, 12-month trend, and you go, look, this stock keeps going up. The last 6 months, they've doubled in price. Let's buy it and hold on to it for a month. Like, is you know what I mean? Is that maybe
Right.
I'm
So, in trading, there's two schools of thought. One is the fundamental analysis, where people are looking at the company, the management, the CEO, the company's growth prospect, the products, their balance sheet, and that is more fundamental investing, and that is suitable for people who want to hold stocks for more than 3 years, right? Because you're looking at, the future, what's going to happen. So that's fundamental analysis, and the school of thought that we teach and that we use is technical analysis, which is we don't need to know what the company does. A lot of times I'll trade stocks, I don't even know the company's name. I just know their little symbol, right?
right.
Little symbol, 3, 4 letters that they have. And that's what we do as a day trader. We're just getting in and out. We call it, trade it, don't date it,
Right.
So we're getting in and out, picking the shorter term gyrations of the move, and this is done using some strategies and patterns we teach. And the patterns are as simple as, memorizing a picture. Hey, if you see that picture on a stock's chart, that's the one that is, got 65% odds of going up. And we're just playing that odds.
Got it. Got it. So, okay. So if someone's getting started, if they're just getting going with this, or they're struggling, or they've spent some money and lost it in that, like, is there a basic amount? Like, if anyone listening to this, if they've been thinking about it and they, or maybe they've already been doing it, is there like, do you need like $100, $1,000, 5 grand, 10 grand, more than that? What would you say you need to kind of get up and going and started? If yeah, like what advice would you recommend to someone who's getting started or already started but really struggling?
Right. So, I mean, my first thing would be to obviously more capital, the better. That's obviously better because gives you more cushion, more comfort, and you're not going to be worried about losing a little bit here and there because you are going to lose initially. Everybody does. So, if you're looking to trade currencies, which is forex market, most brokers will open an account with $100, right? I mean, I would really recommend minimum 500 for forex. And then if you're looking to do stocks, and if you're looking to do, let's say, investing or holding stocks for more than a week, I mean, you can really open it up with $1,000, $2,000, but I would still recommend, 3 to 5,000 minimum. And if you're looking to day trade, which is getting in and out every single day, then SEC has a rule where you need minimum $25,000 in your account to day trade, and really it's closer to 30,000 because if you put in an account with 25,000, you lose your first trade, you lose $100, you can't day trade. So you really need 30,000. However, we have like a hedge fund where we back traders with our own capital so that they can trade, and in exchange we take a percentage of their profits. That's one of our business models, and in that you can get started with 3,000 contribution, and we will give you the rest, whatever it's required
Right,
for
which
you
is
to
huge
trade.
because you're basically giving, hey, here's 27,000. Now they probably can't spend all 27,000, but you got to give
Exactly.
it to them. Yeah,
Yeah, they can use that capital to put on the trade, but they can only lose what they have put in,
yeah,
right? So once
right.
they lose what they've put in, then they will be asked to put in more. But some traders, like we've seen them, they've been with us for a while. We let them go a little bit additional because we know that either they'll good traders, they'll get it back, or they'll be funding it again. So that's one of the approaches. However, honestly, if someone's starting out, they should not even think about putting money in right now because now they have demo accounts, right? Which
Hmm.
works exactly like the real account. The prices are real, the chart's real, everything exactly as a real account, just that the money is fake. It's virtual money. So my suggestion, download those, play around with them for a couple of months until you're good, until you're consistent on a demo account. Because if you're not gonna make money on a demo account, you're not gonna make money on a live account,
Right.
right?
Yeah. What do we say that the martial arts? We say like bleed and cry in training, not on the battlefield. Right.
Exactly.
Yeah. So now, why would someone invest in currencies versus stocks? Why would you do one versus the other?
I mean, it's mainly personal preference. Some people like stocks. Some people gravitate more towards stock. Some people like forex. The good thing about forex is that it's 24 hours. So you don't need to. They're not certain hours. Like stock market is 9:30 to 4 p.m. Right.
Right.
So if you're at
And
work, if
that's
you got
Eastern,
another
right?
job, Eastern exactly. So if you have another job, I mean, you can't really day trade all day. Whereas with forex markets, it's 24 hours. So you can come back from work, you can take a look at the markets then. And also the other thing with forex is there's no real limit. Forex is the largest market. You could take $1 billion, throw it on the market, and you wouldn't even cause it to move a little bit. You know, so
Mm.
that's you can go as big as you want. With the stock market, there's a certain limit. I mean, you can't buy $1 billion worth of stock. You're going to cause it to triple already just by you buying it.
Mm.
So there's a little difference there. And as traders get more and more, I guess, bigger in their sizes, they slowly gravitate towards forex.
Got it, because there's more opportunity there.
Exactly, but I personally feel that because once you learn how to trade, once you learn the patterns and strategies, they work the same on stocks as they on forex or even bitcoins. The patterns are the patterns. So once you learn one style, it's really easy to just add another one later on.
Got it. Because I was just about to ask that. I was about to say, like, how are they different? Currencies, if I personally, for me, again, this is just me, listeners. I hope this applies to you. But I've always thought currency, because I travel a lot. So currencies, I feel like that's kind of like would be easier to play, because then I keep my ear to news. Like I go to Japan, I've been to Africa, Philippines, America, like certain places in the States. I feel like certain currencies, I could keep my ear to the ground and be like, oh, this is gonna happen, and kind of guesstimate what I feel like is going to happen to the currency. But I mean, I really know nothing about nothing when it comes to evading in those. So maybe that's like the
Right.
worst way to invest in stock in currencies. Um,
That's the way. Some people actually do that but that will be more longer term. So let's say
mm,
you travel to a country, you see, oh, there's some recession going on here, real estate's crashing, the market's down, whatever. So you see, okay, going forward, it might get worse, right? Or going forward,
right.
it might get better. But those are applicable if you want to hold stuff, because you have to let the scenario play out, what you have in mind. With technicals, it's more about charts. So when a chart does this, we get in. When a chart does that, we get out. And it's more easier to keep a track of, because with the fundamental, you might expect U.S. economy to grow, the U.S. dollar to go up, but you don't know when that's going to happen, right?
Mm-hmm.
So you have to really hold on till that. And a lot of time with fundamentals, what happens is you get in thinking a certain thing is going to happen, but the position is going against you. You're losing money, and you're like, oh my God, maybe I was wrong. You get out, you take your loss, and next morning some news comes, and you were right. It spikes back up.
Mm,
So with fundamental, that's the hard part, and that's why I never used fundamental, because it's so hard to figure out
mm-hmm,
what's
mm-hmm,
really going to go on and when
mm-hmm.
it's going to happen.
Right. Yeah. No. And I like the analogy, because you say like with the technical analysis, it's pattern recognition, and like you said, it's almost like a picture, because you're looking at charts. So if charts look like this, get in. Charts look like that. I love that, because that just really simplifies it. And it's, again, you don't need a photographic memory. You just understand where things are going. So I love that. Now, what's a good, like, what are real expectations for people? Is that a real expectation? Like if I start with $500, or if I start with 5 grand, for stocks, and I get in this, and let's say I've got you as my coach, and I'm like reading everything, and I'm super like on the ball, and I'm dedicated to making this work. It's realistic to expect 8 to 10%, or more likely expect 5 to 10%. So if I start with
Oh,
five,
much more, because in 8 to 10% is more suitable to investors, because investors, they're looking for 8 to 10%. They're looking to basically beat the market return, right? As a trader, you're timing it. You're getting in and out frequently. So 8 to 10%, a week or month is also pretty reasonable. It's
mm,
doable, because we're taking a lot of trade. We're not buying and holding something looking to get our 8%. We're getting in, getting out, locked in 0.5%. Getting in, getting out, locked in 1%, right? Getting in, getting out, locked in 0.25%. Getting in,
mm,
getting out, locked in 2%. And we're adding those percentages rapidly, that you can get exponential returns. And actually, one of my partners, Jared, he's doing a webinar soon where he's going to be showing how he took a $2,500 account and turned it into $100,000 account in 1 year period,
that's
right?
awesome.
Including, yeah, and he's going to be, because when we were about to do the webinar, I thought, it sounds too cheesy. I don't know if people are going to buy it. He's like, well, they have to. I'm going to show them my statements, and
Right.
I'm going to show them my tax returns. How are they not going to buy it?
Yeah, yeah, yeah. Well, and that's, unfortunately, people are so afraid, because people have bought, and it's kind of like what you mentioned. I think that's a really valid point. When people, they get started with something, and they don't, we call it proof of learning. They don't get that proof of learning right away, like within the first 2 weeks or something, and then they just like, oh, this doesn't work, and they bail. I'm, again, going back to martial arts. Like I trained Gracie Jiu Jitsu. I trained with Rickson Gracie in Japan, Brazilian Jiu Jitsu, and at the tournaments, Brazilian Jiu Jitsu tournaments, there'd be like 500 white belts, there'd be maybe 200 blue belts, there'd be 50 purple belts, you'd have maybe 5 or 10 brown belts, and you'd have 2 to 5 black belts. And it's just how long people tend to stick with stuff. And I don't know why that is. It's unfortunate. But like you say, like when people, so it's almost like they get conditioned that because they don't stick with things long enough to get good at them, that then when they hear these claims, like I've got the 7-figure funnel formula is a course that I've got, and that's something where I literally started with a $500 Facebook budget and helped grow that into, now of course it wasn't from pure zero. I had a company that already had a product that was that was of interest, but it was an automated funnel and we grew it and built it. But like you said, like people don't want to believe that sort of stuff can happen because it's never happened to them before. And like what we're talking about here, like it sounds like I haven't done your course or your program, and I've got no real benefit for endorsing your stuff. But I mean, just from having talked to you before and even now, it sounds like it's really broken down to be very simple. And I even love what you talked about there, that just how you answered my last question. Like it's not like, oh, I'm going to come in with $5,000 and I'm going to double it. And at the end of the day, you're like, no, you're getting 1% here, you're getting 0.5% there, you're getting 2% here, and it's like this battle of inches. And I love that because that's the, like, people want to like have that overnight success, but that just doesn't happen. It's a battle of inches almost in everywhere in your life, unless you're out of shape trying to get in shape, because your body wants to be fit, so it will help you. But once you're like in any sort of decent shape to improve your fitness, it's a battle of inches. Anything that you're actually like, at a kind of where you should be and you're trying to improve upon it, it's a battle of inches. So it just sounds like you said, people may not want to believe it, but it's real. And if you stick with it, I'm sure that the results will come, because it's just, I mean, we invented flight. I don't think people realize that. Humans invented flight. That's like me telling you that I'm going to unzip my skin and step out looking 10 years younger. Like, you're like, that's crazy. But we did it.
Exactly.
You know what I mean? Like,
I mean, it's like people, for example, you eat healthy for a day, you go work out for a day, and then you check your weight again the same day. You're like, oh, why didn't I drop some pound? I mean, it's not going to happen overnight.
Right. Well, it not to happen overnight. And just to even encourage your point, weight is the worst way to measure health, because muscle weighs more than fat. So unless you are severely obese, obese, if you're like within your normal BMI, weight is a terrible weight, because you're going to get heavier. Like I know petite women that weigh like 140 pounds, but the skinny girls like them weigh like 80. But it's these girls have a ton of lean muscle mass, and the muscle is super heavy. So even that body fat percentage is the way to go.
Exactly, because it happened to me once actually. I was not losing weight. I was like, but I still look better now. And then I realized that the fat percentage dropped, but the weight was the same.
So what was some of the best advice you ever got in trading?
The best one is just to let the statistics play out and not basically get the idiot outside of your head, right? Everybody has an idiot inside their head. When you get into a trade, you're like, maybe I should take my profit here. Maybe I should get out here. Maybe I should double down. Maybe I should go all in. Maybe I should become the next, billionaire. And you just to control those thoughts and say, all right, no, I'm not going to do that. Let the trade play out. Let the odds play out as it should. And basically disassociating yourself from the trade is the best thing ever you can do. And that goes same for business too. For business, for real estate, for whatever. Like if you're doing marketing on Facebook ads, you're like, all right, that's my budget. I'm going to try it out, right? And after the campaign's over, I'm going to take a look at the stuff and maybe tweak it out. But what people do is they tweak it in between. You start a campaign, you can't tweak it the same day. Let it play out.
Yeah. Oh, that's you're speaking to my pain point there, because I get clients phenomenal results, and I'm lucky if I get myself half the results I get them. And it's that the ability to be objective, that it's you're more playful, right?
Exactly.
So you're not as afraid. Yeah. So now, what are some of the mistakes you see? What were some of the mistakes other people were making? Because I want to get into, you said you got to level 7 in like 6 months. But at the same time, you say it's a battle of inches. So how did you get there so fast?
Look, I traded like Forrest Gump. I basically I did not listen to myself. I did not listen to anybody. I just trusted my mentors. I just said, all right, they're saying do this, so let me just do this, And I did it, and it worked. What other people do is they might take the same course that I did, right? But they might try and do something else. They might, my mentor says I should exit when the stock gets here. Let me see if I can get a little bit more, right? A lot of people do that thing. They try and optimize a system, And in terms of optimizing it, they mess it up even further. It's like one of the quotes that I had on my Instagram recently was, you give a man, a way to make $1 million in 10 years, right? And in the hopes of getting there quicker than 10 years, they're going to tweak it, they're going to optimize it. And in doing so, they will not get there, not
Yeah,
even
they're
in
gonna
1 year,
totally
not
ruin
even
the
in 10
recipe.
years.
Yeah, they're gonna totally ruin the recipe.
Exactly.
They're gonna go, oh, that's too much sugar. I don't want so much sugar in my meal, and they take it out, but they don't realize the sugar caused a chemical reaction with blah, and so they've got flatbread. Yep, yep, totally get that. Totally get that. I don't know why humans do that, but I guess because we're not robots. I don't know. And
Yeah,
we
and
have
I guess some people have to, right? Because that's the balance of the world. Because if everybody became like, overnight success, everybody it became an entrepreneur, you wouldn't have a workforce to work for you.
True, yes. Well, and unfortunately, and this is something, so I've before this, I mentioned to you, recently got a 4 bedroom, 4 bath house. I have some cousins that needed a place to live and we all moved in. And I'm trying to teach them or get into their head that like, hey, like I know a couple of you are still in school and stuff, but like I don't know if you realize, but there are billions of people on this planet and a lot of them are competing with you for an income. So I know you might have the day off, or it might be your reading week or whatever, but you can't just laze around. Like just because the people aren't here in your house, like trying to take money out of, or food out of your mouth, it doesn't mean that they don't exist. There's something called evolution, and there are creatures that have gone extinct before humans got involved. And even with that, humans came in and we decimated them. So you like a lot of people just want to, and I mean, sure, enjoy your life, but I think that you have to be focused on growth and mastering whatever it is you want to do. Like if you're not focused on mastering it, if you aren't passionate about it, focus on mastering it, I feel like that's a dangerous place to be in. If you just go and do your work and you kind of leave and you're like, oh, I can't wait to check out, to go home, you're in danger, I feel like. Like you'll be okay, like you can kind of do the minimum and satisfy your needs, but there's something called present bank and future bank. And if you're not willing to invest in the future bank of whether ensuring that what you do will continue to earn you an income or getting better at it or even opening up new opportunities, if you're just kind of riding on what you need to do to get by, I mean, as soon as anything changes, you're gone. Like if you're just a bus driver and you're just like, you do your 9 to 5 and go home, I feel like that's a dangerous thing because I don't know if anyone's noticed, but we have a lot of self-driving cars and there are plenty of companies that would love to save that money on a salary to pay a driver, right? And I'm sure unions are going to hate it, yada, yada, yada. But the reality is it'll be safer, there'll be less accidents, and it'll be more efficient. And that's what we want. We want things to be more efficient. So if you're not invested in mastery and in growing, that's a really dangerous place to be in. So you kind of have to do that. You have to be invested in yourself. You have to be focused on mastering it, and you have to love what you do. So, um, but then maybe that's why people mess with the recipe.
That's true.
Maybe that's why we're shooting ourselves in the foot. So
Yep, exactly.
now, you mentioned like day trading. So is there like a daily discipline or a daily routine that someone should go through or would go through if they were to be like either a part of your program or just they want to get into this themselves?
Right. So what we do here as a day trading approach is, everybody makes sure that they're in the trading room by, 8:45 or 9 o'clock. They make sure that they're in the room 8:45, 9 o'clock, and at 9 o'clock we do a morning meeting where we're going over stuff, so they can actually see our screens in a webinar platform,
Mm-hmm.
and our audio is on as well, and they can hear everything what we're doing, the morning meeting, what stocks we're going to be looking at, and everything they get to see in real time.
Hmm.
So what we recommend is they attend the meeting, watch what we're looking to trade, do all that analysis, and then we trade. We do our trading, and then when we're done trading, we do a recap of the morning trading, what we traded, how we traded, why we traded, why we got in, why we got out. We do a whole recap, and then when the trading day is done, what I teach my students is we have a spreadsheet which tracks all their statistics. So I always tell them take 10 minutes, fill the spreadsheet out every single day, and after a month, 2 months, 3 months, you have full statistics of all your trades, and that can be used to form a systematic approach for
Mm-hmm.
you.
Mm-hmm. Mm-hmm.
So that's the whole approach we take. And I also recommend, for people who are having issues, because a lot of people have issues where, and this is a common issue in trading, that they sell too soon, right? They're not able to hold on. They
Mm.
see a little profit, they take it. That's the biggest issue every single trader has. And what we recommend for them is whenever you feel like getting out and you feel like exiting, step up a little bit, take a few deep breaths. And we have trading psychology recordings that we give them, which are actually created with a clinical hypnotherapist. So they can listen to those MP3s, get in a good state before the trading day, and that helps to create good habits, and that's how I think of it. I'm big on like NLP, hypnosis, because I actually did it myself when I was trading for that firm. When I was having troubles going to the next level, I hired like a hypnotherapist. It was like $200 an hour, and we did sessions together, and that got me through that, and that's why we created these recordings.
Yeah, I think that's like the personal self-talk. There's a fantastic book, Think and Grow Rich, and one of the chapters, if nobody here has read that book, they really need to go get that book and read it. And if you own it, you need to pick it up and at least skim through the chapters and read a couple of pages and get something out of that, because that book is phenomenal. And one of the chapters is auto-suggestion. And in fact, again, bringing back my cousins, they're brothers and sisters, so they're always like loser and like this sort of stuff. And I keep snapping at them for that because you don't realize, but you're implanting that in your head. Like you say it jokingly, but that becomes negative self-talk that will stop you. It will limit you. If you are running a race and your body is tired or your mind gets tired, mind over matter. If you're running and your mind gets tired, your body will never carry you when your mind gives up. But your mind can push your body to keep going. And so you have to protect it. You can't let people push that stuff in your head. And every time somebody says something, I think they said every time someone says something negative, it takes 7 positives to erase it. So whether it's hypnosis or it's affirmations or something, I don't really believe in the law of this is, I guess, my opinion, but I don't really believe in the law of attraction, in that if I think fuzzy thoughts, fuzzy things appear in my life. But I do believe that, like you said, you have to prepare yourself to be steadfast in moments of uncertainty, and part of how you do that is literally like hypnotizing yourself with your affirmations, with positive reinforcement, with coaching yourself, so that way when you're and having a coach, so when you're on the precipice and you're afraid to jump because it's you're scared of heights and it looks tall, you've got someone to remind you, look, you've got the parachute, we've checked it 7 times, just jump, you'll be fine, just make sure you count to 30 and pull the string or whatever that is, right, to help you overcome that. So
yeah, exactly. I mean, people need to realize hypnosis, law of attraction, all this stuff, it's not magic. You still have to do stuff. You still have to take action. You might, be in the bed visualizing about, how good you're going to look when you lose the weight, when you're going to get healthy. You can do that. But all that will do is just get you in a good state.
Right.
But then you have to use that good state and actually go work out.
Right. Yeah. You got to
people
get amped
think
and then
like,
go
I'm
do the
just gonna
workout.
Think about it. Exactly. Yeah. People think I'm just going to sit, I'm going to dream, and I'm going to be, thin again.
Click my
no.
heels. There's
you
no
just get yourself in a state, and then you push yourself for further action.
Yeah. I saw a sales page the other day. It was like, manifest thinness and dissolve cellulite with I'm like, you got to be kidding me. People are buying this? Like, that's so
You would be surprised. We saw in trading, we see this all the time, because this is one of the industries where there's just tons of marketers lingering around acting as traders. And I literally saw trading with astrology or trading with the stars. Like, oh my God, you know what I mean? And they sell.
Yep. Oh yeah, because everyone's looking for a special. I mean, first, people are superstitious. Everyone's looking for a special hook. I was in the Philippines and someone was telling me that they knew someone that could teleport. He was a Tai Chi master and he could teleport. And I'm like, has he done that for you? No, because it takes a lot of energy. I'm like, oh, but you believe him? Yeah, I believe him. And I'm just like, yeah, you need education. Like, I'm sorry, but there's people that have lots of money out there and why wouldn't you want to train? If you could teleport, why wouldn't you want to train other people or brag about it at least, right? Why wouldn't you teleport to a bank and get a bunch of money and then teleport out? Like, it's just so silly that.
Exactly.
But we all want to believe, right?
Yeah, I'd have a video that go viral if I could teleport.
Right. I mean, look at David Blaine. He levitated, and and he's like, he's got I don't know how many millions of views. So, no, I think that life is way simpler than people like accept, and that we create all these stories and things on top to complicate things. Like,
it's all in the idiot between our ears. Everything's in there. It's we create everything in a way,
Yeah.
So.
No, we totally do. I mean, we're such powerful manifestors. We are such powerful creators. Again, we put people on the moon. Like, we've done such phenomenal things. We've doubled and tripled our life expectancy. We've built buildings taller than any natural, or we built buildings as tall as mountains. Like, we communicate. You and I are communicating from, like, well, now we're on the same continent, but before we were on other sides of the planet, and we're speaking in real time. 10 years ago, I'd said I could open up a portal in my hand and see and speak to someone in real time and even send them stuff, have something on my end and put it over to their end. People be like, that's witchery, like that's mad, but we do it, so.
Yeah, and forget self-driving cars. Like I saw in Dubai, they're coming up with self-driving planes quicker than cars.
What?
Yeah, they're saying 2020, we're launching it no matter what. They already have it going like self-driving planes right now, like
That's
drones,
awesome.
little drone
Yeah, yeah,
things.
yeah. I saw that there was like a trade show thing and for China, and it was because the traffic was so bad. They had like little two-person,
Yeah,
like drones. It basically was just a big drone. That's what it was. So
yep.
that's awesome. So, all right, so that's your morning routine. Is there any other? That's a great tip. That whole, I mean, whether it's self hypnosis or positive affirmations, I think that's really important. I also think it's really important. I love how you said that you've got a group that meets every morning because you need to associate with people who are like minded and that will remind you and push you to be on the path that you want to be on. Otherwise, you'll get taken down somebody else's trail. It's like a cold or a sickness, right? Like people might not tell you to do different things, but just like you catch colds off people, you can catch shitty attitudes. Oop, I swore, but
Yeah.
you can catch bad attitudes, opinions, mindsets, ideas, things that will stop you in your tracks from getting the progress that you deserve and the results that you want. So,
Yeah,
um,
I think a community is imperative because especially if you're working from home, right?
yeah,
Or if
yeah,
you're working from office, because trading is one of those businesses where most people are trading from their home or their home office,
right.
or they're basically trading by themselves. And if you do that for a while, it gets boring.
Yep.
It's just you get bored. You're done trading and now you're like, all right, now what? You don't have
Mm-hmm.
any colleagues, you don't have any anybody to talk to, and it can get boring at times. That's why group is really imperative because we're there together every single day, talking, chatting, sharing ideas, and what that does is it keeps motivating you. And then when you see another person doing really well, you're learning from them, right?
Yep. And
Or another
sometimes you even get
person doing
frustrated. You're like, why do they have results and I don't? And you're like, yeah,
yeah.
yep,
Yeah,
yep,
sometimes they do, but it depends on how you take the frustration. I mean,
yep,
for me, I took that frustration as motivation. I was like,
yep.
if he can do it, I can
I
do
can
it
do
too.
it. Yep. Yeah, yeah, yeah. Well, I attribute that to CrossFit. There's a guy at my old. I'm actually driving up there tonight because the Open starts. But yeah, there's a guy. It's him and I are always like chasing each other. So it's like, oh, he can do muscle ups. Why can't I do muscle ups? Ah, I got muscle. He can't. And then we're just always trying to improve each other. It's a good friendly thing. So we
Yeah, I
go.
think that's good. That's good. Anything group approach is good. I used to work out in a gym. Now I'm got bored. Now I like to do more classes like CrossFit or
Mm,
something like that. Just
mm.
keeps you more motivated when you see others doing it too.
So so we talked about the challenges to overcome. We even talked about some certain strategies. We talked about how you could do trading in 24 hours. Now, can you make? I guess you could still make money in 24 hours. Is there like a minimum time frame that you need to hold on to a stock or a currency?
Not really. You can get in, get out anytime you want. You can get in, you can get out the same second. So there's no limit. I mean, typically as a day trader, you're holding 5-10 minutes minimum, I would say. Sometimes quicker too. So as a day trader, that's typically the approach. And then another style, which we call swing trading, which is between the trading approach and the long-term approach. Swing trading might be getting in today and you're getting out 3 days later. You're just
Got it.
playing that little swing up or swing down. So
Got it. So
it really
day
depends
trading is
on what
same
type
day,
of
then you got
approach.
swing trading. There's kind of like some big jumps though. You talked about like 5-10 minutes minimum day trading, 3 day trading, but then you were like 3 years.
Yeah. Yeah. Anything that you exit the same day is a day trade. Anything you hold more than a day is a swing trade. And then typically long-term trading would be anything more than a year would be long-term trading. That's if you're doing technically that way we do it. If you're doing fundamentally, then you got to give it 3 years because if you're expecting the company to
Right.
grow, you got to let it grow.
Right, right. Yeah, you got to give time. People are dilatory. You got to give them time to implement
Yeah,
and get
look
things
at
done.
Facebook, when it came out, $30, everybody was like overvalued, it's going to go down. It's a social media, it's not going to do anything. And it did go down from 30, it got cut in half. But
Yep.
now look at it,
Yep.
right? Over $100 right now.
Wow. Wow.
So
Yeah, I wish I had bought some stock in that and Google and Microsoft way back and Apple. But you
I,
never
I
know, right?
bought Facebook at 30, I got out at 31.
Darn it.
I was like, all right, I made $2,000, I'm good. And now I saw, oh my God.
So, with
And
all the technology that's coming out, and even things like artificial intelligence and projection models and things like that, where do you see the future of your industry going?
I mean, the more the industry is heading towards automation, it's heading towards cutting down discretionary traders. Earlier, you would see traders who would sit in their computer from 8:30 to like the market closes 4:30, and sometimes even after market you can trade. So you would see people trading all day long, pushing the keyboards, and that's what you see on documentaries and movies, right?
Hmm.
5, 6 monitors, they're just pressing the keyboard all day
Right.
long, and that style is dead now. Those kind of traders don't make any money because now the market's got smarter, it's got more efficient. There's a lot of automation, and those old setups don't work anymore. So now you have to get away from becoming that kind of a trader who's using his guts or his intuition, getting in, getting out. What you have to do is more towards automation. a systematic approach. So for me recently, my approach is fixed. I get in a trade, right? Whatever, I put in an exit point as soon as I get in. So if I'm getting in a stock at 30, I put an exit point at 29. So if it goes down to 29, I'll take my loss and I'll get out, right?
Right.
And I'll make sure as a day trade that loss is not more than $1,000,
Right.
right? So it's capped at 1,000. So if I buy 1,000 shares at 30, I get out at 29, I lose $1,000, right?
Right. Right.
But I
Right.
automatic as soon as I get in, I set a target of 32, right?
Right.
So
Right.
I'm
Right.
looking for 2 times my gain. So it's such a binary approach where either I'm going to make it 2,000 or either I'm going to lose 1,000. There's no in between, right? And if I
Right.
just do that over and over, I could win 4 out of 10 trades, lose 6, and still end up profitable because on 4 trades I made 2,000, I made 8,000. On 6 trades I lost, 1,000, I lost 6,000, net profit 2,000.
This is battle of inches. So when you say
Exactly.
the automation part, I'm curious to know about that because it's still day trading. So you're not at your computer all day, but you mentioned in the morning that the guys are working all morning. So what part does the automation come in?
So automation would come in your thinking, where you don't get into a stock and then say, oh, where should I get out? Where should I take my
Mm.
profit? Or
And then you
if it
just set
goes
the
against
tools.
me,
It's almost like you
yeah,
preset the tools. Hey, if this drops
yeah,
to here, sell.
exactly. Because you can put the orders in any now 99, well, 100% brokers have this now, where you can set in an order where you can set in an upper limit 32, lower limit 29, and then the orders are done automatically. You don't have to press the keyboard. It goes to 32, it
Mm.
automatically sells it. It goes down to 29, it automatically sells it and cancels the other order. That's called one cancels another. So you can put 2 orders in. Whenever one of them is hit, the other one gets canceled. So once you've taken the trade, you can literally get off from your monitor and let it play out.
Got it. 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 Yeah, I like that a lot. Now, I had a question and it just left me because I was like, oh, that's the way. Got it. Yep. What was the question? Total brain fart. It's okay. So, future of the industry is going towards automation. It's going towards tools like this, which I think is super cool. Does it does it even the playing field? Does it give more of an advantage? Does I mean, because with all these automation tools, I'm just wondering, like, at what point does it just become putting money in and getting money back out? Like,
I
because
mean,
it's
it's basically like that now, where it's the only time you need to think is when you're taking the trade to decide if that's a good pattern, if that meets the criteria of the strategy. That's the only time you got to think. But once you've taken the trade, you're letting it play out, and that's what I meant by automation. Is not necessarily creating a black box system. It's more about setting in and eliminating wherever you need to think. Because as soon as you get in, if you're putting in your orders, there's no way you can, mess up. You can't say, oh, you can't break your plan basically, right? You
right,
cannot say, well, maybe I should take my profit early, or maybe I should take my loss early. There's no
right,
such
right.
thing. Either up or down, you put the orders in, let it play out.
Got it. Now I remember what my question was. What happens if you have stock you can't sell? Because I mean, people are like, yeah, if it's dropping, you sell it. But what, like, is there an, like, I'm foreign to this. When I hear that, I'm like, yeah, but what if you buy a bunch of inventory and you can't get rid of it and the stock's plummeting? Like, does that happen? How do you like?
Not necessarily for us. I mean, that is more for people who are running, multi-million dollar or billion-dollar hedge funds because they're buying big sizes. For them, they can't get in out, immediately, because just by them exiting or getting in, it's going to move the stock. So, but for us, for people like you and I, and we're not trading billion-dollar positions. We're looking to make $1,000 here and there. So our position is not. It's really insignificant to the market because a lot of the stocks that we trade, they do over 1 million shares, a day, right?
Mm,
Most of them do like 10 million shares a day,
mm,
and most of us, we're buying 500 shares, 1,000 shares,
right.
right?
Got it.
So for us to get in and out, you can get in and out the same second. It's really easy. But
Got
we
it.
don't trade penny stocks. That's something we don't, and that's something we do not recommend or suggest or never trade, because those are the stocks where you can get hurt. That's where the stocks where you can get in, but it's hard to get out. So I mean, anybody
Mm.
involved with penny stocks, just stay away. You're gonna get hurt bad.
Got it. So penny stocks are a big no-no. Now, what about buying? Because it is a finite. It's not when a company gets shares. I mean, they don't have an unlimited supply of shares. So how do you? I guess there's, because if you're like, oh, I'm going to buy some shares. I mean, I guess you just jump into the jet. I'm just kind of bewildered by that because at least like when you go to Walmart sometimes they're like, oh, they haven't stocked the shelves yet. There's no milk. But with the stock market, people just make it sound like, yeah, you just buy and sell and buy and sell. And I'm like, yeah, but where are the buyers? Like who are these people
Right.
that are buying what you're selling? And how come there's always a supply of shares for you to buy if like that's the part that I get confused by.
Right. So basically, what happens is if you look at a stocks, we call it the level two. Level two is the order book, where you can see on the left-hand side, what price people are willing to buy at, right, and how many shares they're willing to buy. And on the right-hand side column, you see what's the price, it's selling at, and how many shares are available to be sold. But what happens is there are millions of day traders like me, right? Millions of day traders trading all day like me. There are different countries trading like me. There are banks who make the market. These are called market makers, well, whose job is to always have availability of shares. That's their job. Market makers are paid to create the market. So you will see market making companies, banks, Goldman Sachs, they are just sitting on the bid, which is they're willing to buy always, right? And they're always willing to sell. But what they do is they make the spread. So they're always buying at 48.95, right? And they're always selling at 48.96. So they're always there. So people are buying, they're selling, they're buying, they're selling, and they keep making 1 penny, right? And they do that like millions of times a day.
Oh, right, because it's the fee on the trade. So they're just they're the
Exactly.
intermediary.
Yeah, because when you want to buy a share right now, let's take an example, Microsoft, right? Let's assume Microsoft is at $60.15, right?
Right.
So there's not just one price. $60, there's always two prices. One is called the bid, one is called the offer. And on the bid, they will be like $60.15. On the offer, it will be $60.16. So if you want to buy it right now, you got to pay $60.16. But let's say you buy it, and now immediately you want to sell it, you can sell it at $60.15, right? You have to sell it on the left side. You have to buy from the right side. And there's a 1 penny spread. Usually, some stocks have 5 cent spread, 10 cent spread, but they're usually 1 penny spread. So there's market makers' job is to always be on the left side, always be on the right side. They're just sitting there. They're not looking to make money off the trade. They're just sitting there, letting people buy and sell, and they keep making that penny.
Right, right. They're just there. They're making money on the transaction.
Exactly.
They're like PayPal or your merchant account. That bothers me. I'm not going to go on a rant, but it bothers me that like merchants are like, yeah, we want, or credit cards. We want 2% of everything you process. Why? Did you do the work you do? What are you doing? What are you doing? Why do you deserve 2%? It should be a flat rate. Anyway, sorry, keep going. Got it. See, but I even like that better. They're making 1 penny to 5 pennies. They're not like, we're getting 2% of the stock price.
Yeah, but think about it. I mean, they're making.
It's billions. It's tons huge.
A stock does an average, a good stock might do minimum million shares, but usually stocks are doing 20, 30 million shares a day, right? And there's 5,000 stocks in the market.
Right.
Imagine making the market on 5,000 stocks, 10 million shares. I mean, you're making billions every single day.
Right.
But then there's risk too, because some market makers also lose money. That's the risk that they take. Is sometimes they might be net short, net long, or net long, let's say 50 million shares, and the next the news comes out, some bad news comes out, stock went down. Now they have to eat that loss too.
Yeah, they're the ones left holding the bag.
Yeah, so a lot of people blame them market maker, but don't blame them. It's a hard job.
Right. Yeah, when it's good, it's really good. When it's bad, it's equally expensive.
Yeah.
That's awesome. So, I mean, you've come and you've given some great info here. You've also got the site, is it LiveTraders with an S.com.
Yes.
That's where if anyone's interested, they can go and find out more about your training program and get involved and actually work directly with you. Is that correct?
Yes, that's correct.
Yeah, so you can get involved and work with you, and if anyone needs some help and guidance, to get involved and be part of a community that's doing this on a daily basis. Even if you have some money, you can get, and you want to be, to be a day trader, you need the 25 to 30 grand. So you can start with basically, the few $1,000s and be able to get up and running and coached. So head on over to daytraders.com. Do you guys have any like free training material or anything that's available as well?
Right. So what I would suggest people is to go over to LiveTraders.com first and then download the free ebook that we have on there. So we have a free ebook there. Download that. That'll give you really good insight about the approach and if trading is even right for you, because it's not right for everybody. Right.
Yeah.
Like some people do Amazon, selling business. Some people do podcasting. Some people do, it's a different approach. You have to find if you like it or not.
Yep.
So my suggestion, download the ebook. We have some great educational blog posts on our blog. Read those. Watch some of our YouTube videos. All that is free. And then if you feel like, okay, this might be for you or might not be for you, you can give the number on the website a call and speak to my partner, Jared Wesley. It's a free 15-minute consultation. And that's just for us to find out if, trading is even right for you, because it's not right for everybody. We turn down hundreds of people every day because, it's going to take much more time to teach, and it's not really worth it.
Right.
And so you have to find out if it's for you. So give the number a call, get a 15-minute call. Let's get to know each other, and then decide if this is something that you should be even going into.
That's awesome. Anmol, you've given a ton of information. You answered a lot of the questions that I've had for years now about how some of this stuff worked. So I really appreciate that. Is there anything that I didn't ask you or I should have asked you?
No, I think we're good. If anything comes on your mind, let me know.
Yeah, no, that's excellent. I think this was a great introductory. And for anyone, again, if you're interested, you may want to go back and re-listen to this call just because there's a lot of details in this about how to avoid some of the common pitfalls, great info on getting started, what to expect, how much you should budget for it, timelines. I mean, you even gave great tips like minimum trade is usually like 5 to 10 minutes, and just some ideas for, again, strategies people can use to get started, and also helping them understand that it can be really simple, that a lot of things might seem big and scary when you don't know what's happening, like even like what I do, marketing, but really once you start to understand it and master it, it becomes simpler and simpler and simpler. It doesn't necessarily make it easier, but it becomes simpler. So if anyone's feeling overwhelmed or frustrated and that, I highly recommend you go check out LiveTraders.com. There's literally zero benefit to this for me. I'm not getting any commission or anything. I'm just here to hopefully provide value for you, my listener. And Anmol, thank you so much for your time today. I really do appreciate it. I know you've got other things to do. You're house shopping and you got your own students to take care of. So thank you for taking care of my listeners. I appreciate you, and I just hope you have a wonderful weekend.
Awesome. Thanks for having me. Good chatting with you.
You've reached the end of our interview. Now, first, let me thank you for listening. I appreciate and respect you more than you'll ever know. And now I'd like to ask you a couple of questions. First, what 3 lessons did you just learn? What 3 aha moments just jumped out at you? Second, what can you implement for yourself and your business in the next 24 hours? Third, what can you give to someone else to help you with, or give to them to just do it for you? Whatever it is, remember, taking action is the secret sauce to results. Now, if you think this interview would be helpful for a friend, please give them a link to it. It'll help them and it'll help me too. I'd also like to invite you to help me find out more about the challenges you're facing, your dreams, your goals, and how I can help you overcome what's holding you back. We both do better when we know better, and your success is my success. So please reach out and interact. You can visit our website, bestbusinesscoach.ca for Canada or California, where I'm from and where I'm living. You're welcome to also try out one of our paid programs. You can find us on YouTube, Facebook, and pretty much every other social media channel you can think of. You should also subscribe to the podcast, and if you're enjoying them, please leave us a nice review. It really helps. That's all for now. Once again, thank you. Take care of yourself, and remember, the world needs the best business you can build. And I believe in you.